Hello everyone and welcome back to the channel. Today I'm super excited to be doing another portfolio update. We're going to be going over my first dividends in this new M1 Finance portfolio. A few things I want to mention about the S&P 500, people trying to time the market in this trough-like time, why I don't think that's a good strategy. After that, I'm going to just be showing some predictions that Michael Burry has said over the years, just because I think as new investors we see Michael Burry's name a lot. However, I think that seeing his full list of predictions and then how they've played out is a better way to view the situation. I'm also going to be discussing Meet Kevin's ETF. Its name's PP, as ridiculous as it sounds, it's true. I'm going to be talking about why this is a predatory ETF on young investors. And I'm going to be comparing that ETF to ARK Innovations Innovation Fund ETF and how that's performed over the S&P 500 throughout its inception. And then in closing, I'm going to be sharing three financial YouTubers who I think are doing a really excellent job in the scene right now, just to give my audience some different people to watch if if they want to seek out some more actual quality finance YouTube topics. So stick around. So here is the current state of the portfolio, currently sitting at 27,000 about $500. And let's hop into the first dividends I've received. So you can see the first one was $14.04 from Jeppy. And I'm going to be really looking forward to building out these core holdings over the future and seeing how these three ETFs are all going to work together. I think that this is something that I haven't really seen done before. So I'm interested to see how it's going to play out. And then my second dividend came from Energy Transfer for $1.22. So nothing major so far in February. I also did get paid $4 for JP Morgan Chase in January, which I've put into my tracker. But so it's going to be really nice to see how these dividends are going to start working together as time goes on and as we see SCHD start to pay out and SPY start to play out. So here is my investment tracker. This was actually pulled straight off of Joseph Carlson's channel. He linked it. I just thought it was really nice. I'm going to find it and then link a blank copy down below for anyone that wants to use it. But it's really nice. You can see right now I don't have much filled in, but essentially you'll put your dividend amount, your portfolio value, and over time you'll be able to see these charts build out for me as well. And then he gives you predictions over what the expected average monthly income could be. I'm not exactly sure how this is calculated, but it's nice to have. And then you have at the bottom your portfolio value over time. So I do have three goals set out for my portfolio. As you can see here, I want to get $50 a month in dividends by the end of May, $100 a month in dividends by the end of August, and then $150 by the end of December of this year. And I do think that it'll be really interesting to see how I'm able to do on these goals, if I meet them, if I'm late on them. And I just think it'll be nice to test how fast I can grow this dividend portfolio. One really cool thing about dividends as well is I also feel like it takes the burden off of the investor if they can't invest as much money as they wanted to for a month. So currently, if I say my goal is to invest $300 a month, which it is, by the August time, if I can only invest $200 a month, then my dividends are going to be able to make up the rest. So I think it's dividends are just an absolutely amazing tool for investors. One thing about this portfolio is I am trying to hit $300 a month up until May. And then over the summer, I am going to be able to deposit a lot more money. I think I'm going to be able to deposit probably about an additional $8,000 from my current employment that I'll be working at over the summer. So that'll be really nice. And then I also have $6,000 that are in I bonds currently that are just waiting until April until they'll be released. And then after that, I'll be able to put them into this portfolio. So I do think that these dividend goals over the course of this year are going to be met. You know, maybe not exactly the $50 by May, but I do think that'll happen over the summer. And then we might lag a little bit on this 100. But then I do think by the end of December, we will be at that $150 mark, which will ultimately be the goal. So that's it for the portfolio section. The next topic I'm going to move into is the S&P 500, some predictions that have been made in the past, how they've turned out, And I just want to prove to new investors that no one really knows how the next year in the market or the next 5 years in the market is going to play out. So in this next section, I just really want to encourage anyone watching this video to not be scared of the market in this time. Right now, when we might be close to a bottom, is a time where a lot of investors that still haven't sold out of their stocks might be tempted to sell out because they want to just take gains after this little run up recently. And I just want to use this as a chance to let everyone know to not sell out of your stock positions. If you have an index fund, an S&P 500, something with broad market exposure, now is not the time to try to sell out and join everyone else. Right now, you're going to be seeing a lot of estimates saying the stock market could be going 50% lower, and it might. Truthfully speaking, it might go lower. But right now, you're in a strong position. Say you were investing in the stock market in 2008 when things were going good, you were coming out of the tech bubble, and you were feeling pretty good returns. Now, say the stock market crashes about 50%. Now think you kept your assets and you held until 2013, and you're up about double your money in 5 years. Then Jack Bogle, one of the greatest investors of all time, says that he thinks that there's going to be two massive market declines in the next decade. Now, you already have the answer because I already showed you the S&P 500 after that. But it's very interesting because on April 3rd, 2013, this article was published. And we're almost coming up on that decade. However, after knowing that, and then coming back to 2013, you see the stock market continue to go absolutely crazy, even after the declines of 2022. I just want to show you this to let you know that to not pay attention to what people are going to say in the stock market. And yes, Jack Bogle could still be correct. We could see another 50% decline. But I think Jack Bogle would agree with me in saying that this prediction was just a prediction and that it was wrong. So if you're watching CNBC all day, listening to what every single analyst in the stock market has to say, stop. Just stop doing it. You don't have to do it, okay? Relax, chill out, and just know that no one knows what's going to happen in the market. Dollar cost average into the market. If you don't know what stocks to pick, do what I do and buy a broad market index like the S&P 500. That's all I want to talk about in this section. Investing a lot of times can be very scary, and a lot of people sell their assets at bad times because they don't know what the hell they're doing. I just want you to know, if you're watching this right now, just to stay calm. Finance YouTube is very clickbaity, very hard sometimes to see through the brush. Just take a chill pill. Don't even look at the market. If you're worried about where your position is right now, my advice to you would be to not even look at the stock market. That's all for this section. Let's move on. The next investor that I would like to talk about is Michael Burry. Now, Michael Burry is best known for his prediction of the 2008 housing price collapse and then ensuing complete financial collapse. If you don't know, Michael Burry is played by a very famous actor in the movie The Big Short. Once that movie came out, Michael Burry became extremely popular, and people have been looking at him to predict crashes in the future. The problem with Michael Burry is the fact that he's known as a perma-bear. Michael Burry refuses to ever admit that the stock market is in a good position. You're not allowed to predict something, wait for a year for it to happen, and then say you predicted it. No, you need to have specific evidence on when something's going to occur, which just isn't possible in the stock market. And this is just one thing I'm just trying to really hone in on this video, is the fact that nobody can predict the stock market. It's almost like it's his job to just be the hater on the stock market. And I do agree. Every once in a while, you need someone to beat your hopes down a little bit and get you back to reality. However, in Michael Burry's case, he's just flat out wrong almost all of the time. And what happens is Michael Burry is a little child and likes to delete his tweets and delete his Twitter account. And he's done this multiple times. And yes, I do think that Michael Burry is playing a little bit of a character. However, Michael Burry is worth about $300 million and could literally retire a billionaire, if not a multi-billionaire,
if he just put his money in the S&P 500 and let it ride. I'm saying all of this to prove the point that Michael Burry has tried to predict he's come up with numerous predictions that have been incorrect. He is correct every once in a while, but his timing is never correct. And that's what you'll see as a young investor going into the stock market. You'll see a lot of people who say that they predicted the crash whenever they predicted the crash a year ago. And if you are able to predict the stock market or find some type of loophole in the stock market, like Michael Burry did in 2008, it's very unlikely to repeat itself. 2008 was an extremely unique situation that will most likely never happen again. It involved a lot of financial fraud, a lot of under the table things that shouldn't have been happening. Burry was able to uncover that, which is why he was able to make that prediction. However, in these times, unless Michael Burry finds some extremely damning evidence, I just don't think that 2008 will repeat itself. It's almost just like Michael Burry wants another movie made after him. He can't just accept the fact that he made an amazing prediction and he just cannot live it down. He just needs another one. Whenever the fact of the matter is, he needs to shift his mindset into becoming a more balanced investor. He can still be bearish if he wants to, but he needs to accept the fact that the market goes up more than it goes down. Here's just a chart of some of Michael Burry's predictions and the dates that they were on and how the stock market has performed after. This was posted on Reddit 2 years ago. I think whoever made this article did an extremely good job. So May 3rd, 2017, he predicted a global financial meltdown in World War III. It's been, what, 6 years roughly since then? We can say that that prediction was wrong. But now, say you're a big Michael Burry fan. You see that in 2017, you think the world is going to end. He's predicting World War III. Like, this is crazy things to be predicting. And people still giving you an outlet because you got one thing to be correct. September 4th, 2019, index funds are the next market bubble. Since then, they've returned 50%. Incorrect. He did short Tesla's price, which if he did hold that through Tesla's decline of 2022, then he did pretty good. Okay, he got it correct, except it only happened 2 years after the fact. '08, January 21, saying that Tesla stock is going to collapse. Okay, it did. A year later, I mean, does that mean he's correct? Maybe, maybe not. But still, though, saying that something is going to happen and then it happens a year later doesn't necessarily mean that it's 100% correlated. I think that he's a smart investor and was able to call things, but having something predicted to be a year off is wildly inaccurate. He said on 22 February of 2021 that the market is dancing on its knife edge and he's being ignored. So he didn't see that decline until the beginning of 2022. March 3rd, 21, calling Bitcoin a speculative bubble. Now that is one I can get behind. The only unfortunate thing is he's got 5 other predictions before then that are I just can't get behind. And I think he's right about Bitcoin being extremely speculative, especially in that time period. And that prediction was correct. However, you can't just follow an investor because they made 6 predictions and then one of them turned out to be correct. Doesn't mean the fact that he knows all these predictions. If I say enough predictions, eventually one of them is going to be correct. Are y'all just going to start following me blindly? No. And then on '06, June 21, he called it the greatest speculative bubble of all time. Believe what you will about that one. I'm not buying it. I just wanted to say all this to say that once more, that no one can predict the stock market. If you are a long-term investor, you should be buying stocks that are appreciating in value, hold them for a very long period of time. If you don't know what stocks to buy the whole market. It's that simple. While researching this part for Michael Burry, Michael reminded me so much of our friend Meet Kevin, because Meet Kevin just can't stop himself. He is shilling himself out to his audience nonstop. I've covered this in one of my very early videos, but it's just unfortunate how much Meet Kevin loves shilling his audience fear about the market, the coming great reset. Earnings just ruined everything. It's just if you're watching Meet Kevin, you think he even has Michael Burry in the freaking thumbnail of this one, okay? You have to start watching more objective finance people. Meet Kevin, yes, he is a certified whatever the heck it's called whenever you can make a ETF. Meet Kevin, I guarantee you, made more money off of his YouTube channel than he ever has any of his investments. I'm not saying that's a bad thing, but start taking advice from some different people. Get away from Meet Kevin. Get away from Graham Stephan for a little while. I still enjoy Graham Stephan's content, but I have to realize that Graham Stephan likes views a lot, and so does Meet Kevin. The catastrophic ticking time bomb. It's just a lot of fear mongering out of Meet Kevin, and so like Michael Burry. I just want to say all this to say, if you are scared of the market, if you do not know what to do, stop watching them. Meet Kevin, I have no idea how Meet Kevin has this many views with just the garbage financial advice he spouts out. Kevin's new ETF, I'm going to compare it to ARK. I'm going to share some really concerning things that I think about it. The very first thing that I wanted to mention about this fund is Meet Kevin started this fund with $500,000 of his own money. Currently, the fund has net assets of $10.1 million, which means he has about $9.6 million from money that is not his own that he is currently managing. He is currently managing $9.5 million, and just based off of that, you've seen his YouTube channel. Do you want your fund manager to be doing videos like that if he's managing your money? I don't know. Personally, not it for me. Second thing I want to talk about is his expense ratio. If you're not familiar with ETFs, I'll explain what an expense ratio is briefly. Expense ratio basically means that the fund gets to take, in this case, 0.77% of the total assets that is in the fund for management fees. 0.77% seems extremely low. However, you can see that 0.77 is higher than the category average. Okay, now keep in mind, other things that are in this category are funds that are professionally managed by people that all they do is manage their exact fund. These are professionals that have probably worked in the finance industry for over 20 plus years that are finally get to manage their own multi-million dollar funds. And Meet Kevin's fund is 24 basis points higher. Hopefully I'm doing the math correctly. 24 basis points higher than the category average. And you're getting Meet Kevin to manage your fund. Maybe his fund is going to do absolutely amazing. However, I just think this is something that not a lot of people are talking about. How he has been able to get 9.5 extra million dollars from most likely a lot of retail investors who are just blindly trusting Meet Kevin to manage their money in a friendly way, and they don't even know that the category average is so much less than what he's charging. And if you're wondering, ARK, managed by Kathy Wood, their innovation fund has an expense ratio of 0.75, so a little bit less than Meet Kevin. And I'm sure maybe Meet Kevin has a few people on his team working on this. However, I guarantee you he doesn't have more people than ARK Invest. ARK Invest handles billions of dollars of capital. Kevin is managing 10 million and has a higher expense ratio than them on his fund. It's absolutely ridiculous. The fact that Meet Kevin will do this to people that don't understand what he's doing, and if they do understand what he's doing, will still blindly pretend that he is a good money manager is just straight up filth. This is what I want to call out on my YouTube channel. Another thing that I wanted to talk about is why a lot of portfolio managers turn out to be average. This is a topic that Jack Bogle covers that in a lot of his speeches. Essentially, his philosophy is picture you have 100 of the best portfolio managers in a room. Picture this room is now Wall Street, okay? 50 of them will be the top investors and 50 of them will be the lower investors. It's literally just math. It's how it has to work out. Everyone will want to say they can make you more money than everyone else. Statistically, it is a mathematical improbability that someone is the best investor because you have so many amazing investors competing against each other. The average person turns out to just be average in the long run. And I have an example to show you of this. Here's ARK's Innovation Fund matched up against SPY. Okay, what you'll notice is for a while, SPY was beating it, and then ARK started to take over. Okay, and then here, this area was Tesla's massive run, and then it returned to the average. Now, could ARK go on another massive run? Yes, 100% it's possible. Is it likely, in my opinion? No. Why? Because now everyone's paying attention to Tesla stock. Cathie Wood made a great call on Tesla, and she was rewarded greatly. And I hope you took some gains at the top, because if you watch that disappear, you are sad, sad right now. And that's just one of the topics that Jack Bogle talks a lot about is reversion to the mean for fund managers. Now, I think Meet Kevin could follow a very similar trajectory of Cathie Wood. However, the problem is very, very few investors are able to outpace the S&P 500 like this in a sustained manner over time. Now, just for transparency, I've pulled up Meet Kevin's ETF top 15 holdings. As you can see right here, Meet Kevin's ETF. My advice to any young investors watching this video that want exposure to these companies to just buy these companies, okay? And if you want 25% Tesla in your portfolio, buy 25% Tesla. I own Tesla in my portfolio. There is no need to buy Meet Kevin's actively managed fund with a 0.77 expense ratio for him to hold these companies that you can easily buy yourself. I own Tesla in my portfolio. I'll show all of the stocks in this ETF that I also own and how much I own of them. I own Tesla, I own Apple, I own AMD, and I think that's it for the top 15. But please, if you want to put your money in an ETF like this, please understand what it's going to do to your results long term. Just imagine after every single year, someone gets to take almost 1% of all of the assets in your portfolio. If it goes up, if it goes down, if it goes sideways, 1% every single year. I feel like Meet Kevin knows that what he's doing is predatory. I think that Meet Kevin is not going to be an investor for his whole life just because of what he's doing to his reputation. I think it's great that a lot of YouTubers are finally starting to call this out, and I'm glad that I can be on their side. Now I would like to end this video on a more positive note. These three YouTubers I've been watching for quite some time, and I think if you want some more objective finance content, you should definitely check them out. The first one's Kamikaze Cash. He does a really good job breaking down stock options. If you don't know how to use stock options or what they are, I highly, highly, highly recommend this playlist, Data Gang Strategies. He does an amazing job talking about different strategies, and Theta Gang is essentially people that like to sell call options, sell put options, and let time decay make them money. Kamikaze Cash, excellent YouTuber. He's very transparent over what he does with his money. He's been in this video, I really enjoyed how he's starting to go on the attack on what he sees wrong in finance YouTube and just YouTube fraud in general. He also has a very funny Dankest Trade series where if you just want to watch people blow their money up, you can do that right here. You can watch people lose hundreds of thousands of dollars so you don't have to do it yourself. The next YouTuber I wanted to talk about is In the Money Adam. He's absolutely excellent. He does a lot of longer form options tutorials. He has one specific option tutorial that's, I think, almost 2 hours long. It's just very excellent video for someone who's very new in the stock market and has heard about what options are and you're not 100% sure what it means, if you want to learn about this, you have to watch this video or this video if you're on Webull. Absolutely amazing, super transparent about what he's done over the past few months and years, I guess now. He's battled with a neurological disease. I'm not sure if I'm pronouncing that correctly, but he has had some serious health problems. And I think that if you want to watch him, make sure to send him some extra love because he's truly a gem and he is someone that I want to see succeed on this platform for a very, very long time. The last YouTuber, his name is Scott Schaefer. I think he is pretty unique where he doesn't really cover stocks too much or finance. However, he does cover a lot of finance scams. You can tell he is very well versed on these topics and he knows what he's talking about and he has a very good perspective. Really enjoyed this video on Grant Cardone. I was going to make a video on Grant Cardone, watched this video on Grant Cardone, realized I should just redirect people to this video on Grant Cardone. Amazing job. He's done a lot of videos about the Logan Paul crypto scandal. I haven't watched those just because I'm not interested in it. I don't want to learn more about how Logan Paul stole money from innocent kids. It's horrible, and I hope he gets sued out of his mind for it. But if you are interested in that story, he's done many videos over it. And yeah, so I just think he's also a really good objective YouTuber. Calls out Andre Jick in this video. This was a very, very funny video. So he's just an excellent YouTuber. I haven't watched him for too long. I'm probably going to go back and watch some of his older content when I get the chance. But those three YouTubers, I'm going to link all their channels in the description. And if you want to just any of these people that caught your eye, I highly, highly recommend checking them out.
So that's going to be it for today's video. I really appreciate everyone watching. And if you don't want to watch any of the YouTubers I recommended, let me recommend this video I just did on Jack Bogle. Thank you, and have a good one.